Hey, it's Cam from Investors Underground. Welcome to the second Investors Live DVD Tandem Trader. This is your opportunity to learn from one of the great traders in the world. Nathan Michaud is going to be your professor, and I'm going to be your course guide to help you through the content. We followed Nate's live trading action for the last year, and we've condensed it into around 16 hours of content for you to learn from. Trading gives you the ability to take money and turn it into more money. There aren't too many circumstances in this world where super successful people are at all happy to share the secrets to their success. So this is one of those rare occasions where a guy like Nate, successful trader for over a decade, is opening up his brain and letting you watch what he does to make his money on a daily basis. True to the idea of following Nate around for a year, I put together a little picture roll for this introduction chapter, and Nate and I are having a bit of a back and forth in terms of an interview style chapter so people can get to know him as a person and a trader. Chapter 2 will get into some trading concepts and a bit of an introduction to trading, as well as some new theories that Nate has developed over the last year. Chapter 3 is where the live trading action will begin with long trades, and that's the first chapter where you're going to start watching tick by tick live trades. Get a pen, get some paper, you may want to take notes, and you also might want to watch this DVD a handful of times. Nate and I have been working on this DVD for the last 12 months, and everything that we've put into it is there for a purpose. We really hope you enjoy it and learn a lot from it. And we're very interested to hear your feedback, so drop me an email. I'm at cam@investorsunderground.com. A little housekeeping before we get started. All the contents of this product is provided for informational and educational purposes only. To continue watching, you must agree that this product should not be interpreted as investment advice, as any endorsement of any security, or as any offer to buy or sell any security. Investors Underground, Tandem Trader, myself or Nate are not registered broker-dealers or financial advisors. We do not provide any personal investment advice. By continuing watching this product, you agree to the terms and conditions that we've highlighted on www.tandemtrader.com to the bottom of the page there. Everyone has a different way of learning, and just because it's successful for one person doesn't mean it's going to be successful for others. You should not use Nate's track record as a representation of the success that you should expect, and results really will vary from person to person. Any attempt to replicate this strategy should only be done in a paper trading environment. And again, this is for educational purposes only. Anyway, let's get on with the show. So Nate, tell us what sparked your interest in terms of stocks and business and trading.
From an early age, I always was interested in business. I wanted to own a business one day. And I didn't know that that would take me into stocks. My uncle was a successful businessman, but I also knew that he was somewhat into stocks. He had a portfolio, and he had done fairly well over the years. So right away, I put two and two together and knew I wanted to have a business and knew I wanted to get into stocks because that's what made money. And with those two things, I started college, the University of New Hampshire, and I was doing a finance degree. Now, I don't use any of my finance degree today, but it's being able to apply yourself, proving that you can get things done that has helped me in trading today. I was always good at math growing up, whether it was middle school, high school. I was always in the advanced math classes. So it was early freshman year, and I had gone back and forth with my uncle about potentially investing because I had worked at Staples at the time, and they were really exploding. And I was like, well, I'd like to get invested because my uncle did, and he's doing well. So Staples is maybe the best alternative that I have. Maybe I could do that and make a ton of money. So one Thanksgiving, he had said, hey, if you'd like to invest, you can go ahead and write me a check. I'll buy the stock. And then when you're ready to sell, if there's a profit, I'll write you a check back plus whatever you made. And that was a pretty decent offer. I had no idea what to do with brokers. I had no idea how to even buy stocks. I had no idea what it cost, and I thought about it for quite some time, and I finally decided, you know what, I'm going to just do it myself. I figured it out. I opened a broker, and that freshman year, I just went ahead and bought some stocks, had no idea what I was doing, made a little bit of money overnight, one night, and literally have been addicted since. And I don't really think that it takes much to get addicted to the stock market. Everybody has some type of interest in it, whether it's friends, coworkers, or my wife's friends, or old coworkers, or whatever it may be. It doesn't matter who they are. Everybody has an interest in the stock market. It involves money, and the biggest thing is everyone knows somebody who has been successful in the market. So if they can have a conversation, partner, talk to somebody that has been successful in the market, they're all about it. They want to know what the secret sauce is. How do you do it on a regular basis? How do you determine what a good play is and what isn't? And that's really just the extent of their interest. They want to just be able to hand off their money and know that, hey, they might make some money, or they should make a lot of money. They don't really have the drive and the dedication that it takes. Forget the whole rules and risk that you'll learn about along your journey. It all goes back to how bad do you want it and how interested are you? And when it's just, I'm interested because I want to make money and I don't want to put hours and hours and hours and hours and hours of work into it, it's not going to work for them. The majority of trading is about preparing yourself and preparing for those moments where the reward is much greater than the risk involved. And those that just want to show up, be told, hey, buy this, sell this, short that, are not going to make it.
You know, that sentiment really resonates with me. I'm always surprised when I hear about people thinking that they can join some kind of alert service and receive, SMSs to their phone to buy some kind of, low float garbage and think that they're going to make money from it. It just doesn't happen. The only person who makes money from those kind of services is the person running it who gets in first. But I guess, it's really different at Investors Underground because we're trying to teach people to be independent traders, and we're trading in stocks that have the liquidity to be able to support large amounts of people, even trading large size, moving in and out without affecting the price. So Nate, when you started trading, were you successful right away?
I was successful on my first trade. My first trade overnight, I made about $350. And like I said, I was addicted since then. But it was quickly downhill after that because I would just buy things and hold them and then think, hey, you know what? I've got to add some more because my average is so much higher that the only way that I'm going to be able to get back to even is if I add a little bit. So instead of having a 5 average, now it's at 3. I'd double down and I'd have a $4 average. Well, little did I realize that now I have double the risk on something that I was wrong to begin with. And if it continues to fade, I'm going to lose double what I had originally planned on losing. There was a ton of trial and error as I became a trader. I blew through many accounts. I went through at least $3,000 or $4,000 or $5,000 accounts where I just keep on refunding and refunding and refunding. And you think, yeah, that's a lot of money. Well, how'd you get your start? I hustled like crazy. I was working nearly a full-time week within 3 days at Staples. I was working about 10 to 12-hour days, 3 days a week, Friday, Saturday, Sunday, while maintaining the college lifestyle. So I'd go out Thursday nights, go out Friday nights after I got back from work. Then I'd go in early morning Saturday, work till close, go out Saturday night, go in early Sunday, come back, and then cram for the test the next day. I have not met one good trader that has not failed many times and at least blown up once. And you're going to have those setbacks and those times where you question, is this really what I want to do? Is this really something that I'm going to be able to make a full-time gig? Is this something that I'm going to be able to handle? Am I going to be able to handle the emotional side of things? Is this really right for me? And you're going to go through that. We have a lot of new traders that come in and they nail it. They kill it. They go 2K to 5K to 10K. And then they're nearing $20,000 and all of a sudden they're back to 5K. And they don't even know what hit them. It's just because you start to lose touch with reality. And unless you actually reset, refocus, and kind of pull yourself out of the daily grind and realize that, hey, I just turned $2,000 into $20,000 and that's a lot of money. And maybe pay yourself half, take half out so that you can put it in your bank account and realize, holy crap, that's a lot of money. And then since you just did it, why not do it again? And then you get to 20K again, and then you pull it back out, and then you do it again. And you just keep proving to yourself that you can do it. And the only reason that I suggest people kind of pull out is because that's something that I never had done. And I was always adding into the rat hole. I was adding, giving myself more funds to continue to be wrong on, and keep on adding more funds to continue to be wrong on. And had I just looked at what I was doing wrong, how I was trading, and how I could have bettered it, then I would have saved quite a bit of money. Not everyone will agree with me that it's the best thing to wire out. And it all depends on who you are as a trader. And I'm basically talking to the people that are beginning in this particular segment where you want to give yourself the best chance. You don't want to be going 10 to 20K to 30K and then going back down 50%. And for me, when I was starting to become a trader and starting to think about doing this full time, it's all about what's in your bank account. The more money that you have in your bank account, the more you can be detached with what's going on in the market with your money and allowing the trade to work for you. If you're worried about every $100, $200, $500 swing, you're not going to get those $1,000, $2,000, $5,000 gainers. If you're always worried about that $30 or the $50, you're just going to continue to grind those commissions over and over and over again. Your broker is going to be happy, but at the end of the day, you're not going to get anywhere. It took me about 6 months of trial and error during the first summer that I was able to do this full time. I had ended up giving up Staples and I was working for a friend's software company. So I was just sitting on the website all day long and I was able to trade and then answer tech support questions while they came in. Now, unless you can do some type of 24/7 dedication like I was, it may take you a bit longer. And obviously, as I've said in the first DVD, I believe that I can cut down that learning curve by half. So whether it's going to take you 6 months, 12 months, or 2 years to figure it out, I think that by learning what I did wrong and learning what most people do wrong, you're going to be able to cut down that time in half. One of the biggest things that hid my success was my bag holds. And what I mean by that is every time I was wrong, I didn't let myself be wrong. And I would just hold the stock. And then I would add into it. And then I'd add in again and again. And I was just continually throwing money down that rat hole. If I could do anything over again and I was able to take that money back and not put it down the rat hole, I'd have so much more today. And I continually make those mistakes. A lot of times, rather than having patience with the winner, I end up taking profits, but I have more patience with the loser. So it's a continual fight that you'll face as a trader. But once you can create a solid set of rules for yourself and really understand a good risk versus reward situation and knowing when to take it off when it's not working and knowing when to add when it's working, that's when you're going to shine as a trader. The last thing that really took a while for me to understand was thinking that everybody else was wrong and I was right. And I see a lot of people doing that today where you might have a differing opinion on a stock, but you're wrong. They're right. Even if it's going down, you're still wrong. It's going to go back up. They'll always say, "No, did you read the news? Didn't you see what it said? They're going to be the next big whatever." And that's just that denial. And until you're able to get over the whole denial aspect of, hey, you know what? I am wrong. I should probably just stop out and actually focus on what you went in for the trade for and whether it's doing what you thought or it's not. Once you can be able to continue to follow through if it's doing what you thought or stop out if it's not doing what you thought, then that's what's going to allow you to succeed as a trader.
So what would you say is your biggest failure?
My biggest failures as I started was averaging down. I'd always add to that losing position, as I touched upon earlier. If it's not part of the plan, you should not be adding into a position. There are times today where I may be down on a position and I add into it, but it's part of the plan. And that's really my scaling strategy, where I'm not going to nail everything to the penny. It might take 1, 2, maybe 4 entries to get myself long, full size into a stock because of the range on any given day. Meaning, if it's jumping around a lot, I don't want to just be going in one shot and either be right or wrong. I'd rather start in, add a little bit if it's part of my plan, and then once there's the house's money and it's in my favor, meaning an unrealized gain, then I can go ahead and add in full size, and it really limits my risk versus just taking one stab at it and either being right or wrong, giving yourself a 50-50 chance. So understanding the difference between averaging down and averaging in is really one of the biggest things that you're going to need to learn, because that was one of my biggest failures. Next thing was being stubborn, and I still combat that today. It's so easy to add into a loser, but yet it's so hard to add into a winner. And over the last year since I made the last DVD, I've done a lot more scaling, adding into a winner, adding into something with house's money, where worst case scenario, I might end up stopping out for break even versus going in full size on something, having it do a quick move in the direction I wasn't anticipating and stopping out, and then having it end up doing exactly what I thought. What I've done is adding into that winner where I let the trade get on the right side, and then as it sets up again and it looks like it's about to either break out or break down, I can go ahead and add in to full size with that house's money. But on the flip side, when you've got a position that's going against you, really either having that rule that, look, it's not doing what I thought, this was my plan, and I have a stop at X price, either sticking with that, or the second thing is when you are in a stubborn situation and you didn't really have a plan and you're kind of stuck in it, having that oh shit number. And that's what I call it. It's when you grab that oh shit handle in the car when somebody's driving erratically. Whenever you reach that number, whether it be $200, $500, $1,000, $5,000 or $10,000, it all depends on the size of your account. Whatever that number is that you pick, it needs to be something that you can easily make back. Something that does not take you out of the game, something that doesn't change who you are as a trader, something that doesn't really impact your life in any way. So find out what that number is. And no matter what, whenever you're down that amount, just go ahead and kick it off. You can always take a couple good trades and you're right back in the game. But if you let that stubborn loss take you out of the game, that's it. Then you got to rebuild, get your confidence back, save your money, and you're really limiting the chance that you're giving yourself as a trader. Another failure that I have is really having patience with a winner. And I'm getting better at that. But as you get more and more patient, you'll realize that sometimes you wish you had taken it off and sometimes it ends up panning out the right way, which really pries on your emotions quite a bit because you start to contemplate whether or not you should have even been patient because you were just up a ton and then it pulls back, consolidates, and starts to break down. And all along you're thinking, well, I should have just not been patient and taken my profits. So once again, this is something that I'm continually working on and you're going to end up having to work on yourself. But the biggest failure is just being patient with the wrong trade. And there's so many times that you just go back and say, you know, if I had just taken it off at this price, I would have had my day back. I would have had my money back. And this trade that I just made already would have replaced the loss that I had in this stubborn trade that I'm still holding. So that's really the way that you have to think about things. You are going to be wrong, and letting yourself be wrong is one of the best things you can do, because when you don't let yourself be wrong, you're only going to get more wrong, and more wrong is more losses.
So what would you say is the most important trait as a trader?
I would say the thing that I'm best at is consistency, and that comes with each day focusing on a solid risk versus reward setup. I can come each day to the market and make $500, $1,000, $2,000, $3,000 with my eyes closed. And that's great. And a lot of people would say, well, why do you try for something more? And that's that internal struggle that you're going to combat with on a daily basis as a trader. You always want to get to that next level. And over the last 6 months, I've been really trying to push to new levels, trying to scale in and scale out with different sizes, trying to keep my risk very, very limited, but at the same time reap the rewards of having size when the trade goes in my favor. It's very difficult, and it's not for everybody. For me, I like to be able to just come into the market, have a plan, trade well, and take my profits. And if I can do that each day without a headache, it doesn't matter if it's $3,000 or 30 grand, I'm just as happy. Yeah, a $30,000 day would be great, but really understanding what it takes to get to that $30,000 day, for me, it's not what I want to get out of a trading career. And what I mean by that is if you take a look at the people that do make those $20,000, $30,000, $50,000 days, look at their down days, look at their intraday swings. they're up and down 10, 20, $30,000 or more. And that's just not for me. I'd rather have fun with what I'm doing. I'd rather enjoy what I'm doing. And I'd rather not have this stressful intraday where I came back from being down $30,000 and now I'm up 20 grand. That's to me not what makes trading fun. What makes trading fun for me is being able to be consistent and help others. I think a lot of people always focus on getting to the next level. People try to focus on getting to 25K, then they get to 25K, then they want to focus on getting 100,000. Then they get to 100,000, then they want to focus on 1,000,000. What they don't understand is there's always going to be the next level that you need to get. Once you get to 1,000,000, then you're going to want to get to 10 million. Then you get to 10 million, you're going to want to get 100 million. So you need to kind of live in the moment and appreciate what you've done and understand that there's more to life than just always trying to get to the next number. And again, this is contrary to what a lot of people may say, but it really depends on the life that you want to live. And if you want to continually grind and hang out by the computer all day and watch numbers go up and down your entire life in your bank account, but not really experience anything other than trading, then great, do it. But for me, there's a balance that I want to hit, and consistency allows me to get there. Not going for the huge home runs on a daily basis, but really just focusing on what I'm good at, waiting for the trade, letting it come to me, and then nailing the trade. Not always going to be right, minimizing losses, and working to keep stress out of this job that I love.
I was reading in a book and a psychologist was saying that a lot of people feel like they're never reaching their goals because their goals are always changing. But not only that, they're always looking forward and only seeing how far they are away from accomplishing what they believe is going to make them happy, instead of looking back and seeing how much they've achieved and evolved. And I just thought that was a really interesting idea. So Nate, can you give us a little bit of an introduction onto, what is trading?
Trading to me is identifying high probability setups that you're familiar with. Something that maybe 80-90% of the time you're going to be right. And the difference may be patience on a certain trade, or it may be timing on a trade that may make or break the profit or loss. But there's many opportunities that there is a higher probability that you'll be right than wrong on certain setups. And it's those setups that I focus on where the trade will be in my favor. Trading is about predicting moves, and you're not going to be right every time. So it's about predicting moves, but knowing when to be wrong. There's about 4 main setups that I like to look for, and sometimes when you wake up in the morning, those setups are not going to be there. It's all about being patient and waiting for them to come. Every single day, there's over a dozen opportunities. It's just about minimizing what you're looking at and staying prepared for those trading opportunities so that you can go ahead and capitalize on them.
So what is it that you love about trading?
Well, first off, my boss is pretty cool. Allows you to have independence. You don't have to look up to anybody. You don't have to answer to somebody. You don't have to do what somebody else says. In fact, I think the only person that I've had to listen to since I started trading in 2003 is Cam on the first DVD when he said, "Bro, you need to start this right now, and I'm going to help you do it." And from that point forward, he guided me through getting that first DVD done. So I think that's the only time that I've listened to a quote-unquote boss in the last 10 to 12 years. One of the biggest things that I like about trading is that adrenaline that you get when you nail that trade and you know it's going to be a big one. And sometimes I'll post the Free Falling song by Tom Petty because it just boosts you up when you nail a particular short and then the bottom just drops out and you know it's going to continue to go lower and lower and lower and you just want to wait it out. That adrenaline is why I love trading. And the same thing when you nail a breakout, when you're long and you're anticipating this breakout because the chart said so and it did it perfectly, and then it just breaks out and you're up 10 grand all of a sudden. That is the adrenaline rush that you can only get here. And yes, people will say, well, you can also lose. Yes, you can lose, but it comes down to your risk. What were you looking to risk on the trade? What did you risk on the trade, and did you stick to your rules? And if you didn't, yeah, you're going to get ran over. But it's those times when you nail that trade that makes me love trading even more. And I'll talk about this a little bit later on, but I always associate it with baseball. And trading is so much like baseball, where you get up to bat each time and you're not necessarily going for the home run. You're just trying to get on base. You're trying to make solid contact with that ball. Occasionally, you're going to hit it out of the park. And it's that feeling when the ball goes out of the park, which is the same feeling that you're going to get when you nail a trade. And just like you're going to have losses here and there, you're going to strike out. Yeah, you are. But it's about how you bounce back. It's about how you handle your at-bats that's going to help you out as a trader. The more confident you are at the plate, the better you're likely to do. To me, I feel like a 9-to-5 job makes you complacent. I talk to friends and they're all happy when they get a raise or a bonus check for $300 or something. And I never talk to my friends about actual money. And that's, I think, the big difference between your home relationships and your Twitter relationships, for example, where Twitter is kind of the outflow for that adrenaline, where you're pumped up and you're excited and you got to tell somebody. Well, you're telling other people in the trading community, and it makes you feel good, it makes them feel good. And same time when you guys or somebody else makes money, it's nice to get that high five. But in a job, when you get that bonus check and that's really all you have for potential upside. There's no real way for you to do that extra hour of work and really get noticed for it and get paid for it. The harder that you work, the more you pad your boss's pocket. Most people just become very complacent in their 9-to-5s. And there's no other place that your drive and dedication can exponentially create more gains for you. And I think that's the main thing that I like about trading is every day you come to work and you have the opportunity to make exponential gains. And again, I understand that people will say, hey, yeah, but you also can lose. But it's about doing what I said, making sure you pay yourself along the way, making sure you wire out, giving yourself the best chance that you have to be able to do this long term, and never letting one trade take you out of the game.
So what's a normal life like in the day of a trader?
Well, as you guys know from the first DVD, I talked about get up, look sharp, trade sharp. And that's what I do every single day. The first thing I do is I get up, take a shower, and get ready to go. I'm up. I'm excited. If I was just rolling out of bed, coming downstairs, taking a look at what's moving, doing whatever, chilling out, eating a donut, and then come back at 9:28 a.m. to see what's going to happen, what's going on for the day, what's everybody saying, you're giving yourself 2 minutes to prepare for the day. It's all about that preparation. Preparation pays. And if you just try to roll in and follow somebody else's plan, it's not going to work. And I'll tell you one example that this really relates to. And it dates back to college in my stats class, which most of you guys know, statistics was the hardest class that you actually had to try at. And my friend made a cheat sheet, which was allowed. You were allowed to have a one-page paper, double-sided, with all the formulas, notes, whatever you wanted, whatever you could fit on there, you could put on there. So the whole idea is for you to make that cheat sheet, and at the same time you're studying, you're putting down all this information, you know exactly where you put it, and then your brain can go back and find that during the test, being able to know exactly where you put it on the sheet of paper because it's your plan. You created it. You know what you're going to do with each situation. You know where each situation is. And with that, you're able to benefit from the cheat sheet. Now, my friend made one with size 4 or 5 font, something crazy, and it had everything you can imagine on there. And I was like, sweet, can I have it? And so he sent it and I printed it out, double-sided. It was awesome. It had the entire semester on this double-sided sheet of paper. So here I go for the final statistics, and I can't find anything on there. I know it's there, but I didn't make it. I don't know exactly what's written, where it's written, how it's written. I don't know the exact plan because I didn't make it. And I ended up having a panic attack. I ended up, fortunately, taking the test the next day after I made my own cheat sheet. And I think that this is a perfect example of what a lot of people want to do in the market. They just want to be able to come in and take somebody else's cheat sheet and make money. And that's just not how it works. Everyone needs to do their own homework. Yes, you can come and take a look at my scans and see what I'm looking to do with them, but that may not be exactly what you want to do with them. So what you need to do is take that cheat sheet and then create your own, because it's that preparation that's going to lead to profits. So make sure the first thing that you do in the morning is developing your own plan. Don't just roll up with a cheat sheet at 9:28 a.m. thinking that you're going to make money, because you're not. So 7 a.m. I start my morning as early as I can. If I start any later, things start ticking around and I start looking for trades potentially pre-market. I like to get up 7 a.m. earlier if I can. Then I start to do my emails. I start to get caught up with everything that I'm always behind in. And then from 8 a.m. into the open, I'm starting to make a plan for the day, seeing how things react, seeing how particular gap ups are reacting compared to how they were trending before. Are they creating lower highs? Are they creating higher highs? Are they looking like they're going to break out at the open? Whatever it may be, I don't necessarily need to be right or wrong, but I'm developing a plan, understanding the range, and I'm formulating what is going to be my main watches when it comes close to open. One of the biggest things between 8 to 9:15 a.m., and for most of you too, is what do you have borrows on? Are you prepared? Is the top 3 watches some hard to borrow stocks that you don't even have borrows on? Then take them off watch. Figure out the next 3 best watches that's going to make sense for you. Or if you don't have borrows, can you get them? Can you ask your broker to locate them? Make sure that the time you're spending watching these trades are actually tradable for you. Then at 9:30, that's when I'm ready to react. I have my plans for, ideally this stock is going to gap up and parabolic, and I want to short that and then cover into the pullback. Or this stock's going to gap down, it's going to wash out, and I want to buy long and then sell into the pop. Those are my morning scalps. And most of the time, I'm likely to be right on them. But it's all about taking that scalp. You're taking advantage of the morning emotion. You might be right from 9:30 to 9:37, and then after those 7 minutes, it starts to consolidate and go the opposite trend. So those morning scalps are exactly that. You're taking advantage of the emotion, you're taking the scalps, and then you're waiting for the trades to set up. After that morning rush, after your morning scalps, between 10 and 11 a.m., I'm looking for potential fader setups from Scan or Gearing and Perking, stocks that I was expecting to have a further breakout, that maybe had a weak open, they're setting up for a red to green play, or a stock that's nearing 52-week breakouts where I can anticipate that whole number break and a 52-week high. Or fader, something that looks like it's going to finally break down, where we've been watching the chart for a couple weeks now. It finally broke under support, and I'm looking for the big picture idea of a fade and not necessarily that morning scalp where I'm going to get in there and get out real quick. Between 11 and 1 p.m. is when I start to chill out. I don't want to be doing a ton of trades. I don't want to be having size. I don't want to be adding into a position that I'm wrong on. This is sort of where I'm looking for potential opportunity for later in the day. The only trades that I typically take between 11 and 1 p.m. are reactive plays, meaning we've got an intraday parabolic and I end up taking a short on it, or we've got some news plays that came out where it broke out and then it pulled back some and I got long. Something that you're reacting to volume and price action, not something that you're anticipating. Something that you're anticipating comes later in the 2 to 4 p.m. range. Everything that you looked at during lull between 11 and 1 p.m., you've developed a plan for that 2 to 4 p.m. move. A lot of times stocks with big moves in the morning will start to take that curl up towards 2 to 4 p.m. and start to run into the close. And we're going to talk about the difference between something that might be starting to break out between 2 and 3 p.m. and something that breaks out between 3:30 and 4. There's a big difference between timing. Might be a premature end-of-day move. It might be an end-of-day runner. We'll talk about how to anticipate that and how to really understand where those entry points make the most sense given timing and certain setups. And at 4 p.m., I get out of here. I want to go to the gym. I want to get away from the screens. And I just want to really decompress from the day. It's one of the most important things and probably one of the most overlooked things. So the second that you can get out, it's very good for you. And no matter how good or bad your day was, resets, allows you to refocus, and you can carry on. And of course, right after that, I come back and I do my scans. And then after I'm done with my scans, I try to just close the lid, relax until 7 a.m. the next morning.
So exactly what's going to be covered in this DVD?
This is basically going to be DVD 1 on steroids. This is going to be a day in the life of what I do and how I make money. It's going to be scaling in, scaling out, understanding why I make certain decisions, understanding what I mean when I say certain things. A lot of times in webinars, everybody's always asking for an objective answer, a yes or no answer to something that's rather subjective. It doesn't actually have a yes or no answer. And I think that this is the best way to actually answer some of those questions, to see how and why I think certain things, what made me decide that. And with that, you're going to be able to really understand the core concepts and understand why I do make the decisions that I do. For me, when I was learning, I was watching people. I didn't always just PM and say, hey, why did you buy this? Why did you do that? Because there isn't really well, I bought it because it was the bottom, or I bought it because I thought it was the bottom. That doesn't explain anything. But rather, the way that I learned is I said, okay, they bought there. Why did they do that? What did they see? And over time, I had level 2 up there. I had time in sales up there. I had the chart up there. Why were they buying at times of panic? What did the level 2 look like? What happened with the volume? And the same thing on the way up. And this is mainly what I'm referring to right now is OTC land. And growing up, I would watch Modern Rock, and he'd buy something, and I'd be like, "There's no way he just bought," because I just tried to buy and I didn't fill. But then over time, you start to realize that, hey, you actually need to be one step ahead of the game. And you need to buy when nobody else wants to buy, because as soon as it turns, you're not going to be able to fill. And that's going to be actually shown to you very clearly in a couple examples that we have in the DVD, which I wasn't able to really show you before. I can talk about stocks getting thinned up or thick, what that means. And I can tell you what it means now, but unless you actually see it happening, it's never really going to click in your head. So essentially, we've taken everything that we did on DVD 1 and we put in live examples, real-time action, so that you can see exactly what's going on each and every day, how to anticipate it, and how to react on certain situations. Patterns don't always set up the same way. Yes, overall, it's the same idea, the same concept, but it's not always going to look picture perfect. There's going to be slight discrepancies between one chart and another, but they're going to do the same thing. And I think the next biggest thing about this DVD is it's been another year of getting better at teaching people. And that started with the first DVD where, there's a lot of times that I assumed that people knew what I was talking about. And thankfully I had Cam where, he's like, dude, what does that mean? Nobody knows what that means, because nobody knows what the thoughts are in my head. And although I may assume and talk fast and whatnot, it doesn't help anybody. So I've really spent time over the past year bettering how I bring certain examples to the table, bring certain ideas out there so that it's better for you to be able to understand exactly what the point is I'm trying to convey.
That's really interesting. Can you tell us a little bit about the defining moments in your trading career?
Well, I would say without a doubt, the biggest defining moment in my life is something that helped build my character, helped strengthen me, and it tested, number one, my drive and dedication, number two, my motivation, and number three, how I combated failure. And I really have to thank Greg, which most of you guys know, LX21, which you can watch the interview later on in this DVD with, and Scott Herman, who is the owner at Centerpoint, for really giving me the confidence to go ahead and dive into this head on. Two people that I greatly respect, who also respect me, told me, hey, just go for it, talk about it. And so I discussed this at Traders for a Cause in Vegas, and it was really one of the best decisions that I've ever made in my life. To really understand my entire history, I made a ton of money early on. Between 19 and 20 years old, I made money hand over fist, buying stock in one particular name and then rolling it over into the next one and then rolling into another. And it really became such a easy market where it was almost too easy to make money that things were bound to get bad fast. And they did. Each and every time you'd make a big score, you'd put in even more into the next big play. And I ended up cutting my trading accounts in half. I had just over $900,000 and I was going for that $1 million mark. And I ended up taking a couple hits and then one big hit over about a 3 to 4 month period. And I had lost nearly $500,000. I cut my trading accounts in half. And I often contemplated whether or not would I ever get back and how do I get back. And fortunately, but unfortunately for me, I had an opportunity for an easy fix. I had developed a following, and a friend at the time knew that I had a following and knew that I could potentially help him out. So he offered, hey, why don't you help me promote? So I thought, you know what? I can either try to get back each and every day, slowly grinding the $500,000 that I just lost, or maybe I can make it back even quicker. So that's what I did. I had a website and I had a disclaimer and I started to promote companies. And that's fine. That is legal. It's fine to promote companies. It's a gray area and it may or may not be ethical. But I compared myself to others all the time, and everybody else is doing much worse. They're taking stock, they're lying, they're laundering, and to me, I was this little angel compared to all these other crooks. And I made one mistake. I started to trade the stocks. That is a big no-no. It's seen as manipulation. And unfortunately, as you'll learn, that's not a good thing. And my friend started to make some very, very poor decisions at the time. He started to move everything offshore because he wasn't interested in paying taxes. And he would start selling paper at any price. And basically paper is free trading stock. And he would even get to the point where it wasn't even really companies that were involved anymore. It was just an idea, a PR, and a bunch of freely tradable, worthless stock. In other words, a shell. I knew right from wrong. I wasn't comfortable. I stopped and I separated and I got out. I did not want to be involved with any of this. Well, unfortunately, I knew the wrong person. And like I said before, I made one wrong decision. I ended up trading the stocks. So about a year later, I had a knock on my door. It was at my office in Boston, and I was scared. I had no idea what to think. It was a life-changing moment for me. Fortunately for me, I had a wonderful support system. My girlfriend at the time, who's now my wife, Laura, my parents. I ended up going back home to my parents to tell them exactly what happened. They were very supportive. They didn't really know what to do, but obviously they were there to help. And some of my close friends knew exactly what I was going through. Now, fortunately for me, I was extremely naive. And I had a lot of proof, which I didn't even realize I had in the instant messages, the correspondence that I had with my former friend. And fortunately for me, they decided that they wanted everything. They wanted my hard drive. They wanted to really understand what was going on. And the reason I say fortunately is because on that hard drive was proof, IM's correspondence with my former friend that showed number one, how naive I was, how stupid I was. Number two, how uncomfortable I was, how I wanted to get out, how I told him what's going on, where is all this stock coming from? And I was unsure what was going on. I wasn't the leader in this. I wasn't, quote unquote, that guy. And I met a lot of good people along the way. The IRS guy told me, and I quote, "If more people were like you, I'd be out of a job." And that really stuck with me from that day, and it really is how I live my life now. There are no shortcuts. You don't want to make a bad decision just because it's the easy way out. There's laws and rules for a reason, and you don't need to break them. So I was broke again. Not only did I have that $900,000 that I cut in half, but then I lost more. I had taxes that I owed, and I had lawyer fees, a fine, and went all the way down to zero, borrowed $500 from my friend for rent the last month in Boston. And I would say that's one of the most humbling experiences of my life. At that point, I was at my lows, my 52-week lows. I had a small, tiny bit of money left in a prop firm. I was way too emotional to even be trading at the time, and I blew it. I ended up going on a job hunt, and I was starting to prepare my taxes for that year. And I was going through all my documents, and I found this 1099 from a broker, and it was about $1,500 of interest. Back then, it was about 5% at the time. I was like, sweet, more taxes that I owe. And I got to looking at it, and I found another paper, and I'm like, what is this? So when everything went down, I forgot about one of my accounts. And I ended up finding $25,000 in a broker that I forgot about. I ended up depositing that back into an account. I ended up trading from there, and from that point forward, I was able to maintain a steady grind and started my website from there. Going back to what you need to become a good trader, one of the things I mentioned is the drive and the dedication. How bad do you want it? And there's a good quote here. It's not whether or not you get knocked down, it's whether or not you get back up. As you know, with all the idiots on Twitter, the trolls and whatnot, no matter how good the trade is, it doesn't count because, I got in trouble back in the day. Well, if you let that impact you, you're never going to get where you want to be. A lot of people that are finding success, Brandon, Derek, there's a lot of guys that have come from little and now have quite a bit. And anytime they post a good day, it's a chance to give them a high five. But you've got those people, and I'll call them trolls, that decide that they're going to take this opportunity to try to knock them down. Trolls are guys that are not good traders, that need to be able to scapegoat at the expense of others to make themselves feel better about themselves. But my point is as you become better and better, you're going to face people in situations that are going to try to knock you down. And it's about how many times you get back up. It's about how you react in those situations that's going to make you a better trader. You need to stay humble along the way. Live within your means. It saved me. You never know exactly what's going to happen. As a trader, you've seen a couple friends that have come and gone. They were there, they were the loudest, they were great, and then all of a sudden they had this one stock that just took them out of the game, or they got stuck in a halt. And that's why you always need to live within your means. That's why I suggest always wiring out to give yourself the best chance. The what if factor. What if you get stuck in something? And at the same time, you never know when you might have to take some time off. Health, somebody in your family, you. You don't know what's going to happen. So you can't always just be pushing. You need to go ahead and give yourself the best chance you can.
Yeah, I think they're all really valid points. So tell us a little bit about the Investors Underground community that you've built.
I think one of the biggest things about trading in the community that we've developed is being able to find people that will motivate you. You need somebody there to continually motivate who you are as a trader. If not, you're just going to be complacent and be happy with where you're at. There's always a way to get better, and that doesn't necessarily mean more money. It may be better quality of life. It may be better patience. It may be better way to stop out. It may be a way to reduce stress, which is more than any cash can buy. I touched upon this earlier, but one of the biggest things is to be motivated by others, but not influenced. And I do see a lot of people get influenced by people posting profits and losses. And it's good to see. It's good to see what's possible, because that's what really brought me into this game. There was somebody on Twitter about 7 or 8 years ago that I saw post $100,000 gain, and I said, holy crap, I didn't know that was possible. Because here I am in my own little world, and I'm making $300 a day, $600, whatever it may be, and I'm happy. There's nothing more that I need. I'm steady income. But when I saw that $100,000 gain, it opened my eyes to something that I didn't realize was possible. And I think that's the most important thing to really understand about being motivated. It's not to influence you where you need to go and try to make that $100,000 gain, but rather, what did this person do? How did they get there? What is it that they saw that allowed them to put this risk at hand? And it's about understanding those setups and becoming better at those that are going to be making you a better trader. We have a lot coming in the new year, and we're going to be switching from a all about Nate type model to a all about the community model. And this is going to be a great opportunity for members to learn from all the different traders that are great in the chat room. It's going to be more of a mentorship model, and I really think you guys are going to love it. Monorock once said something, and it really stuck, and it's so very true. You only have to get rich once, and that's exactly what it is as a trader. Everybody wants to be a trader. Everybody thinks that they can just make a decision, yeah, I'm going to be a day trader when I'm done this job. It's not that you can say, I'm going to be a day trader. You actually have to prove to yourself that you can be consistent, that you actually can do it. It's not just that you can make a decision one day that says, hey, yeah, I'm gonna end up being a day trader. That's what I'm gonna do. Now, the reason that this makes sense is it goes back to what I've been saying this entire time of making sure that you pay yourself, making sure that you put money in your bank account, because it's that padding that's going to allow you to do what you love. Once you're rich, once, that's all it takes. From there, it's just about continually grinding higher and exploring other opportunities that are going to make you better money. It's like a triathlon. It's like training. It's like a marathon. If you go and try to run that marathon without any proper training, you're going to get hurt. You're going to be injury prone. And I have an example of two recent subscribers. S. Godar, he had about $30,000 in his account. And in about 2 weeks, he turned that into almost $250,000. He was rich. I don't care who you are, $250,000 is a lot of money. Now, what happens is when you have success, it's just a number in an account. Unless you take it out, unless you actually reflect and reset and understand what you just did. And Scott never gave himself the opportunity to really understand that, wow, I just made nearly 1,000% on my portfolio in 2 weeks. And he did not make any changes to what he was doing. He was continuing without even determining risk, without having a solid plan. And he gave that money back in 2 days. Anytime you have immediate success as a new trader, you need to wire out and understand exactly how much money that is. If you do not, this is what's going to happen. You're going to get injured. And now, on the flip side, Jake, who most of you guys may know as NASDAQ Cowboy, has had an incredible run. And he turned his $40,000 account into just as much as Scott did, only the difference was he took his $190,000 profit over 3 days and he requested a wire. He gave himself a $10,000 pay raise in his account for doing a good job, and then took the rest out so that he could understand exactly what he had just done this week. And cool part of the story was he was able to make it to Traders for a Cause in Vegas this past year. The biggest thing to take home from this is, like Jake said, this is truly life-changing. He was able to take that out, and since then, he's made another $300,000. Now, not everybody's going to do this. He's been exhibiting quite a bit of risk, but I've been talking to him regularly, and he continues to wire out. So he can exhibit that risk because he's doing the right thing, and he's giving himself the best chance for long term, and he's using profits to push him to the next level, while at the same time paying himself and allowing him to have the best chance that he can have. And one last example is Tim, Audible City. He helps Michelle in the swing room, and there's just these defining moments in everybody's career where they make or break as a trader. They become that next level trader. And I had numerous conversations with Tim every single day. Oh, I'm trading well. I'm doing this. I made $300 here, $500 there. How do I get to the next level? I'm getting aggravated. I'm getting annoyed. It's just the same thing every day. And yeah, he's complaining about $300 to $500 a day, which most people would look at him like he has 10 heads. But point being is he wanted to get to the next level. And I had told him, just relax. It'll come. When it's ready, when it's time, you're going to have that defining moment, that defining trade. And I still remember the day that he PM'd me and he had an $18,000 day. And from that day, he has not been the same trader since. He's been on to the next level because it gave him that padding. It gave him that confidence that he needs to continue as a trader.
You often compare trading to baseball. Can you talk to that a little?
Absolutely. So in baseball, most of the time, the guys that go up to the plate to try to hit a home run every single time end up leading the majors in strikeouts. Take, for example, Barry Bonds and Mark McGwire. They're both great home run leaders, but they either hit it out of the park or they struck out because every single time they're going up to the plate and they're trying to kill the ball. What it comes down to is consistency. Base hits win games. When you go up to the batter's box, you need to be confident that you're going to make contact with the ball. And whether you ground out, fly out, or get on base, that's fine. That's part of the game. But what's going to give you the best chance of getting on base is getting up to the plate and just trying to make solid contact. If you get up to the plate and you try to hit it out of the park, you're likely to strike out. Much like trading, if you go up to the plate each time and you try to make that home run trade, you're likely to be emotionally stopped out of the trade just because you're trading too much size, or you're likely to blow up because you're taking on too much risk trying to force a trade when it's not there. Everything takes time. Nothing happens overnight. So the goal is just to get up to the plate, come to the market, and get that solid risk first reward type of play. Get that safe hit, and occasionally you're going to hit it out of the park. And like I said before, it's those moments that your adrenaline gets pumped that is why I love trading.
Yeah, that's really interesting. So is your style of trading the only style out there? Is it going to be the way that everyone should trade?
Everyone is a different trader. There is no one answer for any trader. You're going to define who you are. There's a variety of different traders and there's a variety of possibilities of how you can merge and mold yourself into the best trader that you can be. You can take ideas from everyone, different services, different people, different traders, and then determine what type works best for you. Are you a full-time trader? Are you part-time? Are you trying to juggle this in between another job? There's so many different factors that go into really creating the trader that you should be, and it takes time. Sandro, who's in our chat room, Splendors, came in trying to be a momentum trader like me. And he had some success, and he did, but it wasn't who he wanted to be. He was getting stopped out a lot. He was making decent money, but at the end of the day, he didn't want to be monitoring every single tick of every single play. He wanted to take a step back and let the trades work for him. So he's molded into a position trader where he's looking for the best entry and is patient. He's looking for the trade over a couple hours or a couple days. He's not looking for the intra-minute or the intra-hour type of play. Then you've got people like Modern Rock, Bao. You know, he's in and out, in and out, in and out, in and out 600 times a day. That's not going to work for everybody. But if it works for you, do it. You've got Derek. Derek is a machine, and he's continually getting better as a trader, but he's the most like me. He goes in for the entry, he nails it, he gets out. If he has planned for a bigger picture move, he's patient. And then you've got people like Greg and Tom who have made their money. And now it's just about making more money, but not necessarily on an intra-minute basis. These guys come in and they look for money over the short term. They're looking for a position trade that makes sense for them. And when we're all covering intraday, they're covering 2 or 3 weeks later when it's at the lows. And then you've got Michelle. Michelle is a swing trader. And she might do a little bit of momentum trading intraday, but that's not her strength. Her strength is playing her charts and letting them run, letting them work for her.
What would you say your objectives are as a trader?
Determining your objectives as a trader starts with whether or not you're a day trader, a swing trader, or an investor. And you don't want to combine any of these. You should have separate accounts. If you want to be a swing trader, swing in a different account than your day trades, because there's nothing worse than waking up in the morning and having a swing trade be in your day trading account and start to upset you that you held something when you shouldn't even be looking at it. You should be letting that trade work for you in your swing trade account. And the second thing is never letting a day trade turn into a swing trade, because you went in with a plan, and your plan was, I'm going to day trade this stock. Your plan was not, I'm going to swing the stock. And it's more than likely that if you're swinging it, you were wrong. You need to have three things as a trader. You need to have a plan, which is your idea. You need to have something that confirms your plan and your idea. And you need to have something that tells you your entry for your plan and your idea once it's confirmed. Your plan and your idea stems from the daily chart. That's part of your daily homework. The confirmation is seen with the price and the volume. Once that price starts to pick up, once that volume comes in. And last but most important is your entry, which stems from the 1 minute chart for me. Whether or not that's a 5 or a 15-minute chart for you, it could be different. But for me, I determine my entry based on a 1 minute chart, based on the price action and volume, stemmed from an idea off the daily chart. And these three things together allow me to have consistency with trading.
You mentioned a lot that you have a buddy system with Elkwood, and you're always talking about the importance of accountability. Do you think you can speak a little about that for a moment?
Absolutely. I think it's one of the most important aspects besides having an actual plan with trading, and that's really having that person that you can be 100% honest with. Discuss how your trading's going, discuss your good days, your bad days, and pick each other up when you need it. And for that matter, give each other high fives when you nailed it. I think the biggest thing that people do is they get too caught up in being someone. They get too caught up in what people think of them and their appearance online. And what really matters is your bank account. Is your bank account growing? Is your trading account growing? And if it's not, then stop trying to appear as if you're great. Because at the end of the day, it's only the money that matters when trying to become a successful trader. So my biggest piece of advice besides trading is having that person that you can discuss everything with. And for me, I talk to a handful of guys on a regular basis. Probably the most common guy that I talk to is Eric Wood. Every single day at 4:01, I get in my car and I head to the gym. And the first person that I call is Eric. And we talk about what we traded that day, what we could have done better, what we're pissed off about, what we're happy about, and what we're looking at the next trading day. And there's been so many times that Eric's had great days and Eric's had bad days that I picked him up. And likewise, when I've had a good day or a bad day. And it's really important to discuss with somebody, to be able to bounce those ideas off of each other, and to talk about when you lost a certain amount of money or you gained a certain amount of money without having them look at you like you have 10 heads. Because let's face it, you can't talk to most of your friends at home about, hey, I was down $500 or I was down $5,000 and I ended up making $7,000. You don't want to have those conversations with the people that are your friends at home. You want to have those conversations with your friends that you work with. Same thing with Derek. Reaches out, good and bad. And, we've talked many times about forcing those wires, and he's always wanted to really build up his trading counts and push. But for him, when the money's there, just like me, he likes to use it. And he really gets himself into some tight situations. Sometimes they've worked out, sometimes they haven't. And he's talked about his big losses and what he learned from them. And they were definitely good for him to have, because he's become a much better trader with them. But now he's got that nest egg. Now he's wired out a bunch of times. Now he can let his accounts grow. And I think most importantly, our best talks are days that he's been down, where he just needs that pick-me-up. And I can go back to his two biggest losses that we talked about, FNMA and Kate. And both times he questioned, is this really what I want to do with my life? Because every time I get to a new high, I end up giving back 30% of my net worth. Well, those two times that he gave back 30% of his net worth, well, guess what? Now it's only a small rounding error compared to the amount of money that he's made. So it's really these losses that define you as a trader, that test whether or not you've really got it. And if you never really get tested and you're not faced with those situations where you're in a trade and it's like, what do I do? And you've just decided to go full time and you've never really got smoked before, it could be one of those moments where it's like, did I really make the right decision? Which is why I always say, make sure you wire out, pay yourself, and give yourself the best chance you can give yourself.
What is it about trading that makes the failure rate so high, or at least make people feel that the failure rate is so high?
Well, I think it comes down to discipline, and it's pretty much the most overlooked piece of the pie. It's not that profits are the hard part. Finding the right trade to make and being profitable isn't that hard. The hardest part is when you're wrong. When do you cut it off? When do you let it ride? And it really all comes down to your discipline. What's your educated risk? What was your plan? How disciplined are you, and what would you say is your weakness? For the most part, I'm pretty well disciplined. There are times that I have a stubborn trade here and there. And the biggest thing that I've learned over the past year is really waiting for the backside of the move. A lot of times I have the fear of missing out on that big mover that's running from 2 to 5 to 7, and I want to get in there before it starts to pull back. But so many times lately, it's continued to go to 10 and 11. So I think the biggest thing that I've excelled at as far as discipline is actually waiting for that backside of the move. Just letting these trades go. Let them continue to go on forward and, if anything, play long, but waiting for them to shift momentum. Go back a year, I would always try to fight on the way up and I'd end up getting stopped out a million times. But now I've been waiting for lower highs to set in, for them to test their line in the sand, which I'll discuss later in this DVD, and really wait for that set risk versus solid reward to really set up before I actually get in there. My weakness has always been that front side of the move.
What advice would you say to someone who knows how to trade but's in a bit of a drawdown with a few bad losses adding up?
The biggest thing to really understand is not to try to make back those losses. You've got to just trade well, and believe me, profits follow. Everybody always thinks, heck, I'm just going to go double size because if I go double size, I can make back just as fast. Well, hey, wait a minute. Think about the flip side. If you go double the size, then that means your loss is also going to be double. So you've really got to understand that you just need to trade well. Continue to do what got you there and don't change a thing. Slow and steady wins the race. If rules are followed, one good trade will wipe out at least 3 bad trades. And it's true because typically on any given day, if I'm looking to risk about $300 for a potential 1,000 winner, then one good nail will allow me to knock out 3 $300 losers and still be profitable. Not every trade is going to work, but it's what you do with the ones that don't work that counts.
Yeah, I'd have to say I agree with that. So what's changed since you put out your last DVD? What rules have you added that have helped you become a better trader?
I would say the biggest thing that's helped me is I went back through my trades over the last couple of years and I realized that I can count on one hand days that if I had stopped out at $10,000, I would have about $250,000 more dollars in my bank today. And the difference is having that number where you say, you know what, I'm wrong. And allowing yourself to be wrong and not extending that loss into something that's not recoverable for a longer period of time, it's really helpful to have that number. And for me, my number over the last year has become $10,000. If I ever get into a situation where I'm just dead wrong, I've been stubborn, and there's just no coming back intraday, then I will cut off my loss at $10,000. Yeah, it's a lot of money, but it's not really going to put a big dent in how I feel emotionally. And most importantly, it's not really going to be a big hit to my confidence. So at that number, it's easily recoverable for me. If I let it extend to $20,000, $30,000, $50,000, now all of a sudden I'm taking a step back. I'm mad at myself. I've given back the last month and a half profit, and I'm thinking to myself, how can I make it back? Which is the exact opposite of what I want to be doing. So that's the biggest thing that I've done over the past year is I've implemented that oh shit handle number is what I call it. It allows you to stay in the game, stay focused, and keep your confidence. I think it's important to realize that the main reason that traders fail is because they let one trade take them out. Simple as that.
What's the one piece of advice that you give to every trader, not just the new ones?
I would say the most important thing to understand is that the market never stops changing, and therefore you should never stop learning and you should never stop adapting. You always need to adapt. You're never going to be 100% right. The second that you stop learning is the moment that you're going to be humbled by the markets. You're always a student of the market. And even if you've done extremely well and you're on a hot streak, still continue to look for simpler ways to do things. Don't trade scared, but trade smart.
So I notice a question that you get on Twitter regularly is, why have a service or sell a DVD when it's pretty obvious that you're crashing the market every day? Why not just scale into what you're doing more and make more money on the trading side?
I do, and I have tried scaling my trading to the next level. And yeah, I've had some success with it, but also the headaches and the way that I feel when I'm swinging much larger positions, $5, $10, $15,000 up and down, I hate it. It's not fun. I'd rather enjoy every moment of what I do rather than try to always get to the next level. Because when you get to the next level, you're going to need to get to the next level. And then you get there and you need to get to the next level. And you're never going to be happy. So I'd rather focus on the here and the now, make the time that I trade now the most enjoyable. And most importantly for me, I love seeing new traders become great. I'm more proud seeing somebody like Derek, Tim, or Brandon making 5 or 10 grand or even 20 grand in a day. And it makes me more happy than if I had made 50 grand in a day. It's humbling, it's rewarding, and that sort of feeling is more than any money can buy. So I know that kind of sounds cliche, but it's one of those things where I'm really content doing what I do. I can trade and make a few grand every single day with barely a headache on most days. And I enjoy helping other people. I look at other great traders' P&Ls who are up $3 or $5 million on the year, and their intraday swings are constantly going up and down $20, $50, $100,000 in any given day. And that's just not for me. I'm not interested in having a high stress, high reward type of job. I'm interested in a low stress, rewarding type of job. I still want to be excited when I make that $20,000 or $50,000 day. I don't want to just be like, oh yeah, it's just another day. I want that adrenaline rush that I get when I hit that home run. I'm not coming up to the plate to hit a home run every single time. I just want to get on base. And occasionally, I'm going to hit it out, and I want to be excited about that.
So there's probably a few people listening who aren't yet members of the Investors Underground community. What would you say to them?
So Investors Underground live trading chat room is one of the biggest and probably most moderated chat rooms on the web. There's a lot of people in there on a daily basis, and we have minimal off topic. During the hours of 9 to 4 p.m., it's strictly business. Our goal in the chat room is to provide up to the second commentary about potential trades. We do not want traders that are just looking for buy and sell text alerts. We're not looking for sheep that just want to pile in whenever there's an opportunity and then pile out whenever there's an opportunity. That's not how it works. It's not follow the leader. We want traders to understand why there's a good trade setting up, what the risk versus reward potentially is, and what makes it a good trade. Because without that, you're never going to learn how to trade. You're just going to be able to learn how to follow. And if you just learn how to follow, you're nothing more than a sheep. Over the next 3 months, we're moving into a mentorship model. You're going to be able to learn from other traders that have gone through the system and are ready to help others. They already are helping others, but there's no platform for it. And like I said before, there is no one strategy that is right for any particular person. It's about molding to who you are to become the best trader you can be. And if you don't have that opportunity to hear and learn from other people, you may miss something that's very simple that could mold you into the best trader that you could potentially become. We've got a ton of great traders in the chat room. And with that said, it's going to be a fun time to be able to learn from all different types of traders with that one common goal of being profitable on any given day.